Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems from the digital study guide for Chapter 10, the Group B problems for the exercises. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. All right, 10-33. Stock issuance. Hastings issued 112,000 shares of no par common stock for $18 per share. Record issuance of the stock if the stock A is no par stock, B has a stated value of $10 per share, and which type of stock issuance results in more paid-in capital. Okay, so A, 1A. So 1A, issuance, record issuance of the stock if the stock is no par stock, right? So we're going to debit our cash because we're going to get cash, and there's 12,000 shares, okay, and we're getting them at $18 a share. And when we do the math, we end up with $216,000 in cash. Okay. So we're going to credit, common stock. Simple as that. 216,000, right? That's the entry because it's a no par stock. Right. 1B has a stated value of $10 per share. Okay. So they're basically saying the par value was $10. So we're going to debit our cash. We're still going to get 12,000 shares at $18 a share, so we're still going to get 216,000, right? But now, when we credit our common stock, right, we have 12,000 shares at $10 a share, or $120,000 of common stock. Okay, and the difference between the two, because we got more than the value of the common stock, that's our paid-in capital, right, in excess of par. And the difference between those two is $96,000. Okay. So number 2 says, which type of stock issuance results in more total paid-in capital? Now, remember, I wrote here paid-in capital in excess of par. Okay. But the question is asking total paid-in capital. So we're looking really at our equity section of the balance sheet. Remember, equity, if you watched the last video doing exercise 32B, and we created the equity section, we start out with equity and then we had paid-in capital. And in the paid-in capital section, we had our, we'll have preferred stock or a common stock. And then we'll also have our paid-in capital in excess. Okay. And that will give us a total paid-in capital, right? Well, in this case here, our total paid-in capital for the situation A is 216,000, and for situation B, it's 216,000 because it takes into consideration the common stock and the paid-in capital in excess of par. So the answer to the question is that there is no difference between the two. They're both the same. They're both $216,000 as the total paid-in capital, right? We're not looking at paid-in capital in excess of par, right? We're looking at total paid-in capital, right? Semantics, yes, but it's important depending upon what you're looking at, all right? If you didn't understand that, then watch it again or go back and watch the theory videos or telephone speak with an instructor. I'm moving on. All right, 34. Issuance of stock for cash and non-cash assets. Ali Company recently organized. The company issued no par stock to an attorney in exchange for his patent with a market value of $55,000. In addition, Ali received cash for 3,500 shares of $50 par preferred stock, sold at par value, and for 9,000 shares of its no par common stock sold at $6 per share. Retained earnings at the end of the first year was $39,000. Without making journal entries, determine the total paid-in capital created by these transactions. Okay, and you see this is where, if you've been watching the videos where I'm saying, you have to do the exercises because they're all basically the theory is the same, but you have a variety of situations, and if you've done 32, then 33, you see a couple of different situations, right? But it's all basically the same thing, and here's another good example of it. All right, so we're going to want to know what our total paid-in capital is. So we're really kind of like looking at the equity section of the balance sheet. So we have our paid-in capital, and under paid-in capital, we first have to deal with, our preferred stock. Okay, so what is our preferred stock? It says here they received cash for 3,500 shares of its $50 par preferred stock, which was sold at par. Okay, so we have 3,500 shares at $50 a share, and that comes out to $175,000. And because it's sold at par, there's no in excess, no paid-in capital in excess. So now let's look at our common stock. And our common stock was 9,000 shares of its no par common stock, sold at $6 per share. Well, that's not important. So I have 9,000 shares. I'm sorry, it's not important from the perspective of cash received. I shouldn't have crossed that out. So I have 9,000 shares at $6 a share, right, which is 54,000. Right? So my common stock is 54,000. And then what else do we have? We also have the company issued no par common stock, all right, to an attorney in exchange for his patent with a market value of 55,000. So we have the common stock issued for the patent, and that was in the amount of $55,000. So our total paid-in capital, right, is let's see here, $284,000. Okay, and that's the answer to our question, because it says determine the total paid-in capital. It isn't asking for the total equity, even though the problem said, retained earnings at the end of the year was 39,000. Remember, this is a word problem, okay? And it's been a long time since I've said this, but this is a word problem, and in word problems you have information that's directly related to whatever's being asked, right? And in this case here, that happens to be something like this 55,000, okay? Then you have information that has to be manipulated, which is this information we need for the preferred and for the common. That has to be manipulated. You have to do some kind of calculation with it in order to come up with the number you need, right? And then you have information that has nothing to do with the problem. Well, this retained earnings has nothing to do with the problem, because it's not asking what total equity is. It's asking what the total paid-in capital is, right? So remember, when you're the professional, and when you ask people for stuff, they're going to give you all kinds of stuff, and it's up to you to decide what's relevant and what isn't relevant. Okay, right. And and figure out what it is that you're being asked. Right, so with that said, I'm going to end this video. And again, if you don't understand something, feel free to contact an instructor.